Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from H. Jackson Brown Jr., who said, "The best preparation for tomorrow is doing your best today." Our goal for tonight is to do our best to help you do your best as we give you our upfront, no BS approach to all things stock market. We're excited about our show tonight, so get ready as we challenge you to learn. For our main topic tonight, we take a look at the crypto and gold markets and whether you should be looking to buy. So what do you think is the better investment? Stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham. We're Australia's most trusted stock market educators. Good evening, Mr. Gillham.
Good evening, Ms. Cox. I was really excited. Sorry, that was. I was excited because you did a quote by Jackson Brown, and I thought you were quoting one of my all-time favourite singers or music.
Really?
I know. I love Jackson Brown stuff. And it wasn't Jackson Brown, it was Junior
I got nothing
Jackson.
for you on
I know, you've got nothing. You should have had a great comeback and say it was his older brother.
Well, you didn't warn me that you were going to say anything like that.
Just make it
so
up.
I wasn't prepared. I don't know. Don't know Jackson Brown. It's way before my time and he expects me to know all this stuff. You're a bit of a muso from way back, aren't you?
You don't know Jackson Brown.
I'm still going to get you to bring your guitar onto the show.
I don't know. What are we going to do with you? I tell you, if you don't know Jackson Brown, you haven't lived music anyway. You're the doof 80 girl, aren't you?
Probably.
Cool. Well, anyway, before we get into our first segment for tonight, again, we're going to take some live callers onto the show. Now, if you want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your mobile phone and give us a call now. The number you need to dial is 03 9290 9988. That's 03 9290 9988. And as always, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know you were talking to me before the show that you were so keen on taking a lot of callers, so tell everybody to pick up their phone now.
All right, while we wait for you to call, it is the fourth Tuesday in the month, and this means that Dale and I will give you our thoughts on world currencies. So let's get into the charts. All right.
On the screen is a yearly chart of the currencies, the major currencies, not all of them, but major ones.
Yep.
And it's interesting, isn't it?
Isn't it? Look at the spread, and look at the Australian dollar and the Japanese yen.
I know.
You've always wanted to go to Japan, haven't you?
Well, I've been once, but not for very long.
That was a long time ago, wasn't it?
No, it was only about 5 years ago.
That was the Asia trip that you did, wasn't it?
Correct, but I only got to spend a day in Japan and I was really peeved off about that too.
What happened?
Japanese beer and Japanese food. I can't get much better than that.
Yeah, Asahi. You love that, don't you?
I love it, but we were on our way around to China, so I spent a lot of time in China. So I'm probably glad I'm not there right now.
Right.
But let's get to the chart. So
Okay.
Japanese yen, 8.6%.
And then we've got the Australian dollar versus the British pound sterling up 5%, which is good to see. The Australian dollar versus the euro up 4%. Australian dollar versus the Swiss franc 3.62%. Then we've got the Australian dollar. We're actually ahead of the New Zealand dollar. I can't believe that.
No, we get more than $1 New Zealand for our dollar.
Yeah, but it's just inched up a bit.
It's just inched up, and it floats up to that $1.10 anyway, doesn't it? Really?
Yeah. Well, I guess the interesting one: Australian dollar versus the Chinese renminbi yuan, 2.28% higher.
That's good.
The Australian dollar versus the Singapore dollar is actually
down
0.67, or you could say flat, really. And then the Australian dollar versus the Canadian dollar. We've seen a slight drift to the downside, but nothing really to be excited about there. The actual Australian dollar versus the Canadian dollar is an interesting one. We might have a look at that tonight. Australian dollar versus the Hong Kong dollar, down 1.55%. We're seeing the slip in the Asian currency against the Australian dollar.
This is the one that's probably the most important for us at the moment with the high oil prices, etc.
Yeah, Australian dollar versus US dollar, we're actually down 2% at the moment, 2.14%. Australian dollar versus the Russian ruble, down 23.6%. That's strange, isn't it?
That is really, really strange. But I mean, obviously there's something going on there. Obviously the Russian ruble. I know I did read some stuff about it, how they were trying to shore up their currency to sort of upsettle the US dollar currency, but I haven't read enough on it to really comment too much about it anyway, but it is interesting.
So I'm just going to be the really sweet person sitting on the opposite side of the desk to you,
which
saying...
is pretty normal.
I thought you were going to say something the opposite. I'm just offering to choose something. What would you like to look at tonight?
I want the US dollar because it's really important to where we are right at the moment, simply because of oil prices, the cost of energy. Commodities are traded in US dollars, so it's really important for our economy right now. Obviously, because we looked at iron ore and lithium and a few other things over the last few months. We've looked at these areas, and now if our dollar is strong against the US dollar, it's really good for Australia. So let's have a look at that.
Well, it's holding up reasonably well, you'd have to say, but I thought we'd just look at close, the last couple of years to start with. We can see that since February 2021, it's just been slipping down. And this month, we've gone below this low, which is really important because it could signal that there is further downside risk there for the Australian versus US.
Well, it does, but this week, obviously this month so far, it looks like the bar looks like it may be giving some indication of what might be happening in the future. Maybe we've had our slip on that one.
Oh, you think it might be it?
It could be. I mean, we're nearing we're 2/3 of the way through May, and here it's back. It's after falling away heavily down to that 68 cents. It's now back above where it opened. So we'll see what happens over the next week or two.
I guess my only concern here is that we have the potential to drift sideways and down.
Yep.
That's what we could see now.
Yeah, we could see. I'm not just scanning. It could go a bit further down, but I wouldn't like to see it go further down. I mean, obviously, oil prices are just getting way too high. I mean, today I filled up the car and it's like between I think it was $2.10 for unleaded at one service station.
Now, you and I have had this conversation before about water, haven't we? And I could mention a hell of a lot of other things.
My car doesn't run on water, Janine. It really doesn't run on water.
That actually costs more than a bit of fuel for your car. All right. You don't drive far anyway.
No. Thank you.
And you've got a motorbike now.
And I have a motorbike. Well, I'm riding that a lot more because of the fuel cost. But I mean, put the thing in your car and it's like $2. I think it was $2. I think I was paying $2.10 for my fuel today.
I do sympathise with people who have to take a long trip wherever they're going because it would affect them most.
Oh, it does. And I mean, whilst it's, as I'm filling up, I'm thinking of other people that, are on, fixed incomes, pensions, people on, government assistance and stuff like that. So for me, $2.10, it's a bit uncomfortable, but it's nothing too bad. But, I do feel for them. So hopefully the US dollar goes up. So, but anyway, we need to move on. That's it for world currencies for now, I think.
That is it for world currencies. And now it's time to get into our first email for the night.
Alrighty, our first email question is from, I've got to take this one slowly, guys, Nectarios. Hopefully I've said that correctly. Good evening, Dale. I have a question which is somewhat related to the purchase of stocks. I realise that most people who watch your video will be perplexed by my question, but I'll ask anyway. Which is a better form of investment, options or stocks? I've been studying options at university and have learnt a little amount, but I'd want to hear someone else's thoughts on the subject. Kind regards, Nectarios. Really good question, isn't it? Because obviously some people, well, I suppose it's a question if you're talking about stocks, you're talking about trading stocks versus trading shares. And if you're trading stocks, you've got an asset base, and obviously with that, you're looking at something that you're hoping for to grow in price. When you're trading options, you're trading a derivative of that. And so when you're trading an option, you're getting you're looking for a strike price. You're also looking for volatility in time, and there's a whole range of different metrics within that. And so you might be buying a call option or a put option, depending on which way or direction you think that share is going to go. So you're paying a bit of a premium for that, but generally your options contracts, you're only sort of buying them 6 weeks out. So they're quite highly volatile. They're very, very volatile here in Australia. And if you're talking about Australian market, to me, I would just be going stocks every single time unless you're really highly educated and very well-skilled trader. So would you add anything to that, Janine?
Yeah, I think, look, in the research that we've done, you can make more money with stocks. It's just more about what the instrument gives you, but then there's a lot of people that use the calls, they write the calls to get income over the stocks that they're holding.
You can make a shed load more money on options. But the proviso is that you actually have to know what you're doing, because they are, like, if you go into...
I'd rather use a CFD as my preference.
Well, I would too. I used to trade options all the time, and when you buy an option, you look at the buy-sell spread, and sometimes it's 50%. So as soon as you buy, you could suffer a loss of at least 50% of your position straight away, and they pull the spreads really, really quickly. So if you don't know what you're doing, mate, it's stocks all the way from me. But thank you for asking the question.
He did say investment. So if it's for an investment, then what's your perspective?
Stocks.
There you go.
Stocks.
Yep.
Stocks. Writing options is really good though, but that's a whole new different story. But we do have a caller on the line, Janine. I believe we've got Terry on the phone, have we?
Yes, you have.
Terry, where are you from, mate?
Southwest Rocks, New South Wales.
God, you make me jealous, Terry. I tell you, that's a beautiful place in the world. You have a question for us tonight?
Yes, I do. It's on GUD.
Yeah?
I trade GUD regularly,
Yep.
but I also have a holding of GUD that I don't trade. It's bucked the trend as far as the stock market going up and down and going sideways, but it doesn't seem to be going too far upwards. Seems to be moving sideways all the time. And I'm just wondering your opinion on it, please.
Okay, so that's a more longer term hold for you, given you're not trading it?
Yeah, short to long time, yes.
What do you mean by short time? Everybody's got a different perception of short, medium and long. What's your perception?
Okay, let's say 2 years.
2 years. Okay, yeah, that's long term for me. So glad I did that.
But I do trade it as well as holding it.
Okay, fantastic. Well, Janine's got it up and I'm sure she's got some great answers for you. Thanks, Terry.
Look,
Janine.
I don't know if Terry's going to like what I'm about to say about this one.
Hold on tight,
because
Terry.
when everybody who's out there is watching this and you look at the chart come up, we'll just bring that up now, it looks like a dog's breakfast, doesn't it? Let's just have a look. So he was talking about it trading sideways, but look at this, the way this stock trades over the history. It doesn't trend well. You know, it might for a really short period of time, but if he's wanting to trade it over like 2 years plus, it's going to take you on a wild ride. That's the history of this share.
Good
and I really don't
trading
know
stock
where
for a
it's
short
going.
term.
Like, you know, if you were trading for weeks, maybe.
Yep, perfect.
But looking at the way that this thing's moving, but then even then you want something that trends well to make it easier to trade, and this just doesn't show it to me anyway.
Yeah, I used to follow the stock a few years back, but I haven't followed it for a long time because I just gave up. I thought it's not something that for a more medium to longer term portfolio.
I mean, we can tell him a couple of things, can't we? Because we can say that, like, if it goes up above this high here, that would help him.
$13, yep.
Then we know that the direction is likely to be up, at least in the medium term. It's got a heap of resistance overhead around $13.50 or $14. So if it starts coming back below the low of 2 weeks ago, I'd be really concerned about it. It could take out that low. So either way at the moment, when a stock moves sideways, you've just really got to watch to see which way it breaks to know.
Can I add something to, I mean, it's not necessarily because of the analysis, it's more of looking at that stock. It's a sideways moving stock and it has done for 10, 12, 14, 15 years. But it's a question of where are you going to get your best bang for your buck for a longer term trade. You're going to get a bang for buck on something like this, or you're going to get it better on a Wes Farmers or Cochlear or CSL or a top 20 stock, something like that. And to me, that's where my money would go, Terry. I'd be looking at that going, do I keep this zigzag pattern or seesaw pattern, or do I get on something that's more steady growth? And that's what I'd be looking at. Short-term trading, it's okay, but I think that's what I'd be looking at.
It needs to get direction, really for me.
To me, it's not a question of what the stock's going to do. It's about what the strategy is.
Okay.
Cool.
Fine. Our next email is from Tom. Hi, Dale and Janine. Could you please take a look at MFG? And I know you have spoken about this in the past. It looks like it has turned and a few entries triggered. They announced a share buyback in March but haven't executed the buyback yet. Do you think it's wise to wait for the buyback before entering? What is your experience with buybacks in the past? Do they tend to move price much? Thanks heaps, Tom. Great question. Thank you very much. Let's just have a good look at that. And, I think we talked about this one for someone, was it just last week or the week before?
Yeah, we did. I mean, this is constantly on the poor performing stock of the week, which pretty much, and it has been for some time, but it's buybacks more just support stock price rather than see it rise, don't they, really?
Exactly.
They're really just about supporting where the share price is at the moment, so don't expect a spectacular rise. That's all I could say from this at the moment.
The on-market buybacks can do that. Look what happened with ANZ. They had the on-market buyback, and even still, the effect of the market slowly dragged the stock down. It won't. It won't keep it immune from a fall.
No.
But it might actually just help pad out a bottom in the MFG share price. So my only concern is the fact that this low here on the 29th of April has been taken out.
Yep.
So I'd really like to see the stock get above this high here on the week ending 6th of May. The high is $18. A move above that would be a great sign. It could be the start of a run.
Okay, I agree with you.
All right, looks like we have another caller on the line, which is exciting. Hello, Jack. How are you this evening?
Good, thanks. How are you, Janine?
Great, thanks. And you have a question for us tonight. Would you mind telling us what the stock is?
Yeah, Telstra. I've been following your guys' advice and looking at, the top 20 stocks. And I was just looking at, or came upon Telstra, and it seems to have formed a bit of a low and traded back up a little bit. Now it seems to be trading sideways. And I was just wondering if you guys think it's ready to take off again.
Look, you've got a really good stock choice there, Jack. Are you thinking about buying it soon, or is this something that you're just going to wait a while, prepared to wait a while? What's your time frame?
Yeah, I'm happy to wait a while. Happy to wait for the right time to buy in, whether that's soon or whether. And I'm looking to buy for the long term. And
why Telstra? Like, why a big stock like that?
Oh, just because it was in the top 20, as you guys advise, and all the other stocks in the top 20 sort of look like they're, at the top, and they sort of look like, if I were to buy in now, it probably would fall away, whereas Telstra looks like the opposite.
Okay, excellent. It's great to hear you sound like a young person, so it's great to hear somebody young looking at big stocks like Telstra. Fantastic. We'll have a look at the chart for you now. All right.
You tell me, I sound like a young person too. Okay, all right.
He did. I didn't want to ask his age though. Looking at Telstra on the screen there, I'm glad that he's really patient and he's willing to wait, because right now we're seeing this short-term direction with Telstra is down. So it's overall sideways.
It's struggling at the moment,
It's struggling. So since August 2021, we've seen this whole sideways move, which is the same as the market really. The market's just gone sideways since around the middle of last year. It's done nothing. So now we're seeing this move down. It could mean that Telstra's about to take out that low, and if it does, I'd say rub your hands together, Jack, and just wait for that really good opportunity, because there will be a good opportunity, I think, with Telstra.
Yeah, I think, and if you're looking at long term, I'm talking 3, 5, 6 years, I think you're not going to be too struggling too much with Telstra over a period of long time. But I do like it long term. Short term, a little bit of weakness. Totally agree with you.
Yep. Okay, fantastic.
Cool. All right, well, now we have a question from Adam, who says, "Hi, Dale and Janine. First of all, love the show. I was wondering if you could please take a look at Appen Limited. They have been in a long-term downtrend and look to have found support around $6. Would appreciate your opinion. I do not own the stock, but am looking to acquire it when the time is right. Regards, Adam." Good question. Appen.
Yeah, and you'll be excited to talk about this one.
I'm always excited to talk about Appen.
Now, it's one of the tech stocks, and it's been hurt the most, really, hasn't it?
It's been slammed. The tech sector's been slammed, and I mean, it really has. The tech sector in Australia has technically crashed, because when you look at the index, the tech sector index, it's gone over 25%.
Yep.
It has really gone down. And a few stocks in there are showing some signs.
But that's a crash according to industry.
Yeah, that's according to the industry. Yeah, correct. That's what I said. It's technically crashed. So I didn't say it was
not a Dale.
It's not a Dale and Janine crash, but there are signs that there's a heartbeat in some of these stocks at the moment. And I'm not saying broadly across the board which ones they are, but Appen's one that looks like it could possibly be starting to find support. And even Atomos, that the real smaller one that I do like at times, it's holding up at these levels at the moment. Doesn't mean they're going to continue to do it, but let's have a quick look at the chart.
Okay.
Because right now all we can say with Appen is that it's bearish, and we need to assume it will continue to be so until it tells us it's bullish.
Well, this could be, an opportunity here, because it's slowed the fall.
Yeah.
For the last couple of months, it's just gone sideways, so it's showing some sign of support. But I guess until it goes above probably about 750 or thereabouts, what's that high there?
Yeah, 750,
around
780.
750, then that's really not going to tell us anything. So a 1 week up is really not going to. People will be watching to see it make a move, and then the brokers will be saying, "Oh, it's gone up 3% or 5% or whatever it's done," and then people will be drawn into it. That wouldn't be enough, really.
But I think some right now at the time, some people will be jumping into this thinking it's cheap, but then there's not going to take much for it to just go bang through that floor, is it? If a little announcement or something happens, there's not going to be too much. So just stay patient. That's really what I'm going to say to you. Stay very, very, very patient about this one and wait for it to prove it's strong. But that is our take on Appen, and I do think, Janine, it's time we get into our topic for the night, and it's about crypto and gold markets, which may be better, and whether you should be looking to buy into either of these areas right now.
It was heartwarming to see so many of you respond to my call for support so that we could bring you a topic on gold this evening. And I'm super excited And to make it even more interesting, I've decided to add in that we're going to discuss how Bitcoin is not the defensive safe haven asset some in the market would have you believe. What defies sound investing principles is how they have compared it to gold as if to validate Bitcoin. And I'll add something that is of great concern to us. It's how people with little or no knowledge have listened to those who are self-interested and bought into cryptos, only to now be down 50 or more % in value. Well, tonight we want to set things straight and help you to understand the risks that you're taking, and we'll share with you whether crypto or gold is a better investment in 2022.
So right, Janine, I think you've been really stewing on this one, haven't you, for a while?
Yes, I have, and we know that cryptos are high-risk investments and are highly volatile, and so trying to portray that the opposite is true makes me cringe. Gold is not the super sexy investment that people think it is. It's traditionally considered as more defensive, so comparing Bitcoin to it is like comparing Mike Tyson to Mother Teresa. Now, Dale, we talked about gold on a previous show back on the 1st of March this year. So for those who are watching this, if you didn't get the opportunity to watch that past show, you may like to.
Now, just to remind everybody that we previously talked about how gold does not always rise when equity markets are falling. Now, we did bring this to you because of a common myth that gave people the perception that there was a perfect inverse relationship when risky assets fall, that gold would actually rise. But the charts tell the truth, and we have proved how this is just not the case. Now, we know when bigger falls occurred on our market in the past, gold also fell. Now, from your feedback, we know you all appreciated what we did share with you. So we're going to shift gears this time as we want to dispel the myth that cryptos are some kind of new defensive or safe haven investment. Contrary to what many believe, we will show you that even the biggest cryptos are high risk and should not be considered as defensive.
Firstly, I think it's important that we share what defensive means and why investors might buy defensive assets.
Now, I agree, as we're seeing really significant falls across the crypto market, and so anyone thinking this is a defensive asset just might need a little enlightening, if I'm being nice.
Now, I mean,
So what's defensive?
Well, traditionally, if the risk increases in markets, you're looking for something that isn't going to be as volatile.
Yep.
It doesn't mean it won't completely weather the storm. It will completely weather the storm. It might still fall, but just not as much as what the broader markets or growth assets would.
So defensive assets are not going to have any major move downwards. That's what you're talking about.
Yeah, like they could still have moves down.
Move,
but just at the time when fear is heightened and the risk increases, in theory, they hold up better.
So cash defensive.
Cash is
Bonds
capital
defensive.
stable, isn't it?
Term deposits defensive.
Yeah.
All of that, because you're not going to lose your asset
But bonds
based on that.
you can still lose.
But
so
bonds
don't
you
ever
can
think
still
that.
lose, but it's a very defensive asset. So defensive shares are shares that are unlikely to fall with the rest of the market to the same degree.
Yeah, and look, you and I have had these discussions over the years because people have talked about, well, if I just put my money in the big stocks, then I'm not going to lose. But as the GFC shows,
You can.
You can still lose on stocks. You can still lose on gold. I mean, gold had a major fall with the commodities.
Okay.
We saw it, and we've seen it pull back with markets as well, maybe not as much as what the overall markets do. But right now, there's a bit of a shift in what's going on, isn't there?
Okay, so that's it for defensive.
So if we move on, now just before we go to the charts, since forming highs last year around November, December, Bitcoin fell by around 60%, Ethereum around 59%, Cardano 88%, and Litecoin fell by 78%. So I think everyone might have to agree that they're not very sexy now, and definitely not if you happen to have invested in the last 6 months or so.
Oh, that's definitely not sexy, is it? Tell you. Now, before we compare these falls to what gold has done, let's first consider that the All Ordinaries Index, which fell by around 11.6% from the all-time high in the Dow, it fell by around 17%. So again, high-risk assets fall the most in times of uncertainty, and there's a clear winner as to what is highest risk now. What is the highest risk now?
We always advise that it is important to look at where the opportunities are. So does that mean there's not an opportunity in crypto? Perhaps. However, we'll talk more about this in a moment. What we will share illustrates why you should never feel that you've missed out or suffer from FOMO. You just have to be patient, and this means stacking the odds in your favour as much as possible while minimising your risk.
Okay, Janine, well, let's have a look at the cryptos that we've mentioned so we can appreciate the gravity of the current situation and to really understand where they may stop the falls and where the opportunities are. Then we'll take a look at gold, the gold futures and ETFs and physical gold to really understand how defensive this investment has been in the current crisis and where we see gold heading into the future. So let's get onto the charts now because I know you're championing it.
Great, I was waiting for you to say that. Okay, so you can see on the screen there, we've got the Bitcoin. This is in Australian dollars,
yep.
So you can also bring up a chart in US dollars, but that's the overall pattern and shape that's the same. So we can see how volatile Bitcoin was in the early days. Now, this was a pullback into 2018. It fell 85%.
Yep.
To me, that's telling people already, okay, so what? It does have a great strong rise once it gets going, but it's the risk to the downside that people have to be prepared for,
yep.
rather than just thinking about all that upside. So 62% decline we've seen in Bitcoin just recently. That's since that high that we mentioned before in November 2021.
That's massive.
It's massive, isn't it?
And I don't believe it's over yet. And I really don't believe it's over. And I'm going to put out a report yesterday and I was telling people, and I know, can I have the mouse for a second?
Yep.
Just to add a little bit before you go on. In this period here, I was saying, I thought Bitcoin was weak and it could probably go down to 20,000 points. And people told me I was crazy.
Yeah.
And I'm thinking, well, you don't understand how to read the charts because they're not looking at the big picture, they're looking at these micro movements. And I had somebody only 4 weeks ago said, Bitcoin's going to go to $100,000. And I almost said, when?
Who said?
Who said?
What have they been reading?
Who's going to pay $100,000? Because Bitcoin is that one more fool theory. You're relying on somebody else paying a higher price because there's no asset there. There's nothing backing it. There's no business behind it. It's not even a major currency. A currency has the government behind it. So that's what makes Bitcoin volatile, and a lot of people don't understand that. It's volatile because it just relies on somebody else paying more for it than you, and if they don't want to, it's going to come down. And the more people don't want it, the more it's going to come down. Unlike BHP, which it has an intrinsic value.
Well, just to that person's question about it going to 100, do you think it could?
I think it was a freaking guess.
Yeah, but I mean, what are we up to here? Look on the right-hand side of the scale.
I could win Wimbledon too.
Do you think it'll go through the all-time high? I'll put my question differently.
Probably eventually, but then it's another speculative run again, isn't it? So, and he was talking, he said it's going up. It always goes up. I've had so many people saying that, and Bitcoin doesn't always go up. And you can see that. They don't
understand the patterns and things that we teach then that just happen on anything. It happens regardless of whether it's a stock, a currency. It happens on every single thing that's traded.
Yeah, I've been doing some research on Bitcoin, and I'll tell you what, it's so regular for what it does. So, but, it is a trading thing. It's not a safe haven investment.
Okay,
it's very much. And I'm saying you can't make money on it. I'm not saying don't invest in crypto. All I'm saying is it's something you trade with knowledge. Yeah,
so we're seeing there's an opportunity coming, but be patient. So if we look at the next one, we've got Ethereum, which is another big crypto, down 60%, still not immune. It doesn't matter what it is, they've all been hit hard. And like you say, there's a potential for further downside still.
Yep.
Then I've gone to Cardano, the code's ADA.
Yeah.
These are all in Australian dollars.
Worse.
That's worse, 87.7%, massive fall there. It looks like you might even be able to get a nice trend line down there eventually. And then we've got Litecoin, a much more volatile one. Now, this is actually, it had already made its all-time high back in December 2017 and struggled to get through it. So people who are watching other cryptos were probably thinking, well, what's going on with mine if they were invested in this one? And the high in November was nowhere near that all-time high. And yet it still fell 78% from there.
Probably just a little bit before you move on to the next charts is one thing I will say, I've been chatting to people who thought going into a stable coin while Bitcoin was falling was a better strategy because stable coins in theory, this is what they tell you, if you buy a stable coin it can be linked to the US dollar. In theory. So one stable coin equals $1 US. Okay? But even they crashed because when you're paying money to buy the stable coin, they weren't actually putting the money and buying US dollars. They were putting it into the Bitcoin market. And so obviously these have all fallen apart too.
Yep.
So, and people don't investigate what's behind some of this sort of stuff. So whilst on the surface it looked like, well, if Bitcoin's falling, I'm going to be safe. I'll put that into a stable coin. I'm going to get $1 US per coin. Didn't work that way.
Yep.
So because you really do need to investigate stuff, but we need to keep moving, don't we?
We do. Now we've got the gold futures
Yep.
up on the screen there. Now I wanted to just show the history first before we look at the shorter time frame. We can see we've talked about gold, as we said on previous shows, and how at times gold will fall when major falls occur, but then it could have an inverse relationship for a time, but it's not a perfect match. And this big fall that we saw here on the gold price was when we saw the rest of the commodities fall. All the big miners fell from 2011 through to 2016. So this gold actually took off before a lot of those took off. So from that point of view, it recovered quicker. But I still think there's still a potential. It hasn't proven that it's going to fall yet. Okay, but it's been really defensive. We'll talk about how far it's come back. There's still a potential for gold to break to a new all-time high and head towards 2,300 points. Now, I had a look. I saw a few calls in the market. They're talking about gold being down at $1,600 an ounce by the end of the year. And I thought, okay, I'll have a look and see what the charts say. And there is a possibility that if the gold price keeps falling and it takes out this low in December 2021, that we could see it head to 1,660 to 17,000, 1,700 I should say. Well, 17,000 would be awesome, wouldn't it? Dollars per ounce. But at the moment, if gold goes back above this month's high, which is a high of 1910, then it's got a good chance of pushing up through these highs.
So if gold is a defensive asset,
which in this case it's proven, because we'll just have a look at this in more detail.
It's fallen less.
Allow me just to switch to this chart here so we can talk about this. So we can see here what's gone on. Now, I took from this period here in November 2021 to the current price. You could take that low. It had only fallen 1.7%. So that's the movement in the gold futures. The whole time the cryptos are falling 60, 70, 80%.
So you would have been better off in gold than cryptos.
So it's far more defensive, right, is the proof in the pudding there. And what we've seen more recently is from that high, though, it was 14% down. Now, we know that the Dow has fallen in that sort of order.
It's fallen more than that, but yeah.
Our market's been far more defensive than the US market, and because of their tech-heavy sector, and we've got the mining side. And mining's had a massive low in 2016. So even though we could see some correction there at some point, we're talking long-term bullish, even though there will be volatility around that area of the market. So to me, this is a clear-cut case that gold has been far more defensive in this current environment, regardless of the inflation and threat of higher interest rates. It's just held up
why
really
is
well.
it falling? And I'm being devil's advocate here. Why is it falling when the market's falling as well?
Well, at the moment, there's a whole lot of talk about the fact that money is going into the US dollar.
Yes.
That money that would traditionally have gone into gold has gone into cryptos.
Yes.
Money that would have traditionally gone into gold has gone into the US dollar at this time, just because of the mix of things going on around the world.
Okay.
But I still see, look, we'll just have to wait and see. I think there's a low, really close to a low based on my analysis now with gold. So I just want to see it go up for the next couple of weeks to get an understanding of what's likely to happen over the coming months. But it's got a few hurdles to jump.
Yeah, I mean, the thing is trying to make sense for people with these myths that we talked about, with gold being a safe haven asset. And it is a safe haven asset, but you don't necessarily going to make money out of it.
Not all the time.
No, but yeah, correct. That's what I was going to say.
I think the actual safe haven thing is your trend line,
Well, yeah, be out of the market when it's falling and get back in when it's rising.
Because if you'd put the trend line on the monthly chart, this is the weekly chart, but if, let's go back to the monthly chart and just to your comment always about trend lines that keep you safe. Look at that lovely trend all the way up there.
Yep.
and how that would have protected people's money if they were watching this in gold with a trend line underneath it. So, you know, I actually think that it's the way that you look at things that makes you defensive, not the actual investment that you're putting your money into.
Well, it's having a strategy and a process if the market's moving up or moving down, and having one for both ways, not just one way.
Yep.
And most people don't even have a proper strategy for buying, let alone selling, and that sort of stuff. But gold is quite a good, safe investment. And obviously, if you want something that
It doesn't pay rent.
It doesn't pay rent, but if you want to park your money where you're going to beat inflation every single year over a 10-year period, you're probably better off in gold, because you're not going to devalue. Just parking your money in a bank account, it gets devalued all the time with CPI, whereas gold will always outperform CPI and do better than that. So, but it is a defensive asset, but it's not always going to make you money, is it really?
No.
So there are better things to do with your money from certain times, but it's interesting, it has been falling away a little bit.
Yep. Now,
Yeah.
if I've got some time still, this is the ETF's physical gold, okay?
Okay.
So we're looking at a similar sort of movement in this, but you can see how defensive this is.
Yeah.
It's come back from this peak here. This is the recent high in March. If we go back here, we're March 2020. It really hasn't fallen much. We did have an initial decline, but then it's worked its way back up again.
Yeah, roughly, yeah.
Still, it's been quite defensive. The risk is potentially to the downside. If it takes out that April 2022 low, we could see it come right back, and there might be some support underneath here around 220. But something to watch. I'll never say that everything can fall and go into a major decline just because cycles dictate so, but it's just about trying to pick the things that are likely to be, you can hold on to when things do get a bit rough, and this is what looks like you can. But just to digress a little bit, the Dow Jones, here we go, it's to see it in a more pictorial form always makes more sense, because we read out the stats during the start. But it's down around 17% at the moment. There's nothing to say that it couldn't continue to fall down to around 2,800, 2,900 points.
No, I don't disagree with you completely, because I always thought, when the fall started happening on a Dow, in our market, I said our market 8 to 12, probably up to 15, but the Dow 15 to 20 in that sort of bracket. So it's 17%. So I think most of the falls happen. It just hasn't completely happened. Now, I know there's a ton of people out there that are going to disagree with me and say, Dale, the market's crashing. You're a space cadet. You're flying on the moon or something like that. But right now, I don't see the metrics to say.
Well, it's because they don't understand what we look at. So when we're talking about markets crashing, we talk about it's got to be, one, the degree of the fall, and two, where the fall occurs. So right now, would you say that looks like a crash? I think it's quite orderly.
We're in a bit of a bear market, but it's not really a crash, is it? And it may fall. It may eventually fall 25%. And I could be wrong on that, but I don't think it will.
And if the swift part of the fall happens at the bottom, which is generally what happens, then it will be called a crash.
It will be called a crash.
But that's when you've got to think, who cares about who's right and wrong? Just wait. The whole point is just to sit there like that tiger, ready to pounce and get into the good opportunities.
What I said yesterday on my market report, I said, I don't really care which direction the market goes, because I got a strategy, and I don't buy the market, I buy the stock. So I couldn't care less whether the Dow crashes or the S&P crashes or the XAO crashes. I don't care, because the stocks I own, I'll just get at them before it crashes. Yeah. And it's pretty simple.
Now, what I found interesting too is that the fact that the Dow currently to where its price is, so we've seen it find a bit of support. It looks like it might turn around for a few weeks at least. Now, if it does, at the moment it's down about 13 or 14%. If I compare that, we're talking about defensive investments right now. Well, the Australian market's been quite defensive in recent months, because it's just gone sideways. It's only down 7-point-something% from the high versus the US market, which is double. And we generally expect that to be the case when markets decline. Australian market's got a history of doing that sort of thing.
Yeah, and I think right now our market is looking like it is quite possible that our low is the low, or that low that we've had there more recently a couple of weeks ago might be the low, but it's way too early to tell.
We need a couple of weeks up and then a move after that to see whether it's likely to hold.
So I'm not strongly bullish, but I'm not strongly bearish at the moment. I'm just sitting on the fence, getting us all backside, waiting for direction. That's pretty much what I'm waiting for. And it is, and this is the thing that I think you just said earlier in the script is, be patient, because when you're patient, the opportunities will come. And people with FOMO, and the last sort of 12 months, those people that were trading Bitcoin and making a lot of money and skiting to everybody about making money, they've been slammed and they're all giving up. And I know a lot of people that I've seen, or heard stories of that they were trading and they're saying we're making a lot of money at Bitcoin. They're struggling. They're really struggling. And that's a sign that you have very little knowledge about trading. It's one of those big signs. If you can't make money out of Bitcoin now, then there's something wrong with your trading.
Well, I'd say don't give up.
Don't give up.
Yeah, because I mean, it's a good lesson, and there are opportunities to make money. It's just about understanding direction, as Dale's saying. Once you've got that direction worked out, then you'll have more.
Bitcoin is so easy to trade.
Favour.
It is so easy to trade. I was looking at it the other week because I was hearing all these stories from people, and I went, freaking hell, this is so easy and it's so regular, so many things that I could do to trade this thing profitably. I went, geez, why are they struggling? But they are. And again, it's just about a lack of knowledge and having that FOMO and just believing that rhetoric that you talked about, those myths about what crypto is about. It's a speculative investment and you can make a shed load of money out of crypto, don't get me wrong.
So if you can analyse a market, a stock, doesn't matter what it is, you can analyse a cryptocurrency chart.
Yeah. But I'd be sticking to the top 20 stocks first and the big stocks on our marketplace because they're more defensive until you really understand what you're doing. Is there anything else you want to add to this? Or do you
I'm just really excited about gold and waiting to see whether it's going to take the dive towards the end of the year. We don't know yet, or whether it's going to go up. So stay tuned for that.
So too early for gold at the moment. Gold stocks?
It's too early for cryptos, Bitcoin yet, and it's too early for gold at the moment.
Well, I'm calling crypto to be down at least 20,000, probably even lower, to 20,000 or lower in that sort of bracket. So it's way too early for crypto, but more Bitcoin as well. And I'd stick to the big cryptos, not the small ones like Bitcoin and Ethereum. I'd stick to those. Too early for gold. Gold stocks.
Look, I'm already thinking about the next emails.
Okay.
Just because one of the emails that I've got sitting on the desk here is about a little distillery.
Oh, okay. It's the gin distillery, probably. Anyway. All right, well, that's it for our topic for tonight. Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. The number you need to call is 0392909988. That is 0392909988. Get dialing now.
While you call us, we will get into answering the next question, so call now. The next email is from Anna. Hi guys, just wondering your thoughts on GRR. I bought this at 76 cents while I have received a dividend once and it was trading well until now. Looks like it was at the top of the chart and now is falling. Given the uncertainty of the market, it's hard to predict the recent drops. Your thoughts on this, please? Thanks and regards, Anna. Now, I've been wanting to do this all night.
Oh, you just brought tears to my eyes.
You all right? Don't say I'd never look after you, will you?
You don't look after me. Let's answer the question. I didn't even bring the stock up.
Okay, here we go. So we've got Grange Resources there.
Yep.
It's shot off like a rocket recently. Looks brilliant. I'd have to love it, if I was trading that right now.
Well, you do.
So well done, I'd say, on that one. 76 cents was the buy-in price. Looking really nice. The challenge is going to be in managing that, because it's really shot off. Your nearest low is here. We're talking about 46% away. So that's not going to any sort of rule. You might be able to wait for a trend line to come in. I know that you would sit there saying, let's just wait and see if a trend line comes in. I'm trying to find one in all of your mess here in your...
Hey!
And I cannot find... There we go.
It's
up there.
organised chaos.
It looks like it today. So, we don't have... We might or may not. Someone will have to go and have a look at that for us, because I'll need glasses to see that. But you may be able to get one eventually up there if it comes back and test support on that. Really nice angle of her eyes, though, isn't it?
Well, I think she's done great. It's buying it at 76 cents and done very well. And now it's just about protecting profits, isn't it?
Isn't it? So trading with that direction. We don't know exactly where the purchase was, but I'm assuming it was while it was starting to move up here, looking really nice.
But you can bet this kind of stock will actually, if I can have the mouse a little bit, you can bet it's going to come back a little bit and probably give you another trend line point to do. And I'd say that's probably going to happen on this stock. So don't be too surprised if it comes back a little bit and levels out a little bit.
Yeah, I like it. Looks good. Well done. Before I get into the next question, if you are listening to this YouTube live stream as a podcast, then we'd love your help. And that means giving us a 5-star rating, write a nice review. Now let's share the next question, which is from Azalea. Hi, Dale and Janine. I'm from New Zealand and watch your show whenever possible. I'm holding some ASX stocks in my portfolio as well. I've some questions regarding 2 stocks in my ASX portfolio. KSL, I'm holding with a long-term perspective. Recently added some more to my position to dollar cost average. Also paying good dividends. It is a good stock to hold long-term, ? Thank you, Azalea. I'm not sure of the pronunciation, but that is a gorgeous name if that's what it is.
Yeah, I know, it's great. And she did have another stock there, but we only do one stock, so I took that one out.
Okay.
To give you a quicker email to answer.
Okay, you're very thoughtful.
How's that? I am very thoughtful. So what's your thoughts on KSL?
Wow, look, it's just a bit of a mess actually. It's
It is a bit of a
sideways, really not going anywhere, not proving any direction yet. So I think until it gets above one of these highs here, we really won't know where it's headed. If it goes below the recent low that had a week ago or last week, then it may continue to trade down.
Would you dollar cost average this stock?
I wouldn't touch it.
I wouldn't touch it either. So I'm not sure. Yeah, I'm not sure why you dollar cost average this stock, which assumes she's buying it on the downside anyway because it has come off. So I just don't like the stock at all. So
yeah, dollar cost averaging we don't agree with.
Well, especially not in a stock like this at the moment. I mean, if you buy on the way up, and you're buying another pass on the way up, I'm not too against that, but I think there's better ways of doing it. But buying on a way down, never.
Yeah,
it's just it's a real dangerous strategy. So, but anyway, as I said, we don't have much joy for you. But if you do want to talk to Janine and I, please give us a call on 92909988. So pick up your phone right now, give us a call. We'd love to chat to you. 92909988. Next, we have an email from Jazz, a regular here on the show, who says, "Hi, Janine and Dale. Thanks for providing such quality free education and reviewing stocks for us. I'm keeping an eye on Ansell as since July last year it is falling from the all-time high and planning to take a position for the medium term. Can you please have a look at it and give your analysis if it has finished the downtrend at this point and may turn up from here? I have finished your latest book twice and still feeling that I need another couple of runs to get thoughts behind each concept. Many thanks, regards, Jazz." That's a really important point. I often tell people just read the book 10 times because you'll get it. And people don't get it in the first read. They'll get stuff and they think, oh, I love the book, it's great. But then reading a second time, you get more, and the third time and the fourth time.
Especially after they've watched the show as well.
Yeah, and we do that all the time. It's like when I'm talking to somebody who's just finished our diploma course, so we're talking and they say, "Dale, what should I do now? Where am I going to go? What am I going to do?" And I said, "The first thing you're going to do is go back to Module 1. They go, "Why?" And I said, "Because you need to do the course again." And they go, "Why?" And I go, "Because when you go through it the first time, there's all these things you've never heard of before. So you've got a student hat on, trying to understand concepts. Now you understand them. Go back and learn them properly."
When you're applying it to reality, when you're actually trading it.
Apply it to stocks that you're trading and grab 10 stocks and apply everything to those 10 stocks as you're doing it.
Yeah, we always suggested that they get a like a shortcut book, put together a little book of all the tips and hints and everything that's through the course. And we do summarise things at the end of the course for them to put all those notes in together. But it really helps when you're then going through it on a stock that you're wanting to trade and you think, oh, what was that? Oh, then you go back and find it all. It's really easy then, isn't it?
Oh, it is much easier because just don't think you got everything in the first go through it, and that's really, and that repetition really beats knowledge and skill. So, Jazz, read the book a few more times too, and if you own the book, please read it a few times. But let's get into Ansell.
Okay, so it can be a highly volatile stock, and I think it is starting to move in the right direction. But it's still unclear as to whether it's found a bottom yet. It depends on your strategy. So it depends on the rules that you've got for trading it, but just for the average person, I think it is too early.
It is too early. It's a bit, it does not showing signs of strength, and I think that's really what Janine's saying, Jazz. I think we need a lot more to prove it's going to go up more medium to longer term, but keep watching it. I think that's the goal, isn't it?
Yep, I think that's great. I'd like to see it keep going, the next couple of weeks, and if it does that, I think then it could be on a bit of a run.
So, Jazz, keep watching, mate.
All right, now we have a question from Callan. "Hi guys, just wondering, I have bought 2 lots of shares of Arizona Lithium, one of the 17th of January 2022 and the 17th of March 2022, and it's been holding at 13 cents, and I was wondering if I should buy more as it's been holding there every 2 months apart and I am for the long term. Thank you, regards, Callum." All right, Callum, we'll have a look at that for you. So we can see there, I've just drawn some horizontal lines across where the purchase was. I don't know the exact price, but assuming it's around that 13 cent mark that he was mentioning, I mean, it had an incredible rise, didn't it?
It did.
Up to that high, but that's the nature of these highly volatile type shares, is that you can wipe your profit away just in a matter of a few weeks and
Well,
it's
you can.
gone. So this is part of the point of having some really good rules and being able to lock some
It looks like
profits
it's doing
in.
a topping pattern to me, to a large degree.
Yeah, well, it's actually tried to run up, hasn't it? And look, I don't know whether it was a backdoor listing or what's happened, but the monthly chart looks quite odd. It's obviously got to go a long way to get back up. I'd just be watching it really carefully. If it takes out that low, we could see further downside. You'd want to have a stop loss, obviously, there to protect what you've got. I don't think that there was anything really wrong with, depending on where they bought, I don't think there was anything really wrong with where they bought. It's more about the fact that this is a highly volatile stock.
It's interesting to me, the psychology behind people. We've had 2 people said they've bought more stocks, and it's not uncommon for people to say, I bought some more of the same stock. It's quite common. Whereas you and me, we just take a position and that's what we do.
Yeah.
So are people just fearful of what might happen? So they put a
Take
little
a
bit
small
in
one.
and then they take another bit and then another little bit. Or is it because they think, oh, I bought some and it's gone up a bit, so I'll buy a whole lot more of it again. Or and it's come down a little bit, and you hear people talking about buying the dip, which is not so bad when it's on an uptrend, but when it's going down, that's crap.
Yeah.
You know, and it's interesting because right now I wouldn't add to this position at all.
No.
You know, I'd be sitting back protecting my current positions, because if it continues to fall back to those lines that you drew, I just think you probably could go right through those.
And from a psychology point of view, I mean, what is happening to this person who has just seen a huge profit develop and then it get wiped out? I mean, how do you help someone who's in that situation there? I mean, it would have been a 90% return to that high.
Yeah.
It's hard, isn't it?
It is, and some people in that, I'm not saying Callan's doing this, but some people go, oh, well, when it gets back up, they think that they've lost money because it went up 90%, and they think they've lost the money because they treat it as theirs. But like I keep saying on my Monday market report, when your money's on the market, it's not your money. Until it goes into your bank account, it's not yours. So no matter whether you're making profit on a stock or not, all I can do is buy or sell. So if my money's in the market and I've owned this stock, the only way I can realise the money is to sell, to have it in my bank account.
So if they can really separate their thinking.
They've got to separate that emotion and that thinking, because, you know, where you get out and where the stock goes to are 2 separate things. You don't always get out at the last cent, and you don't always get in at the last cent. And right now, I think that would be playing on his psychology. I can buy more, so when it gets back up to $90, I'll make a shitload more money. And maybe he's thinking that, I don't know. But right now, I'd be more worried about it going through what I paid for it. That's what I'd be worried about.
Agree.
I'm not saying I will, but I'd just be more worried about that.
Yeah, I agree.
Cool.
Yep.
All right, well, moving on, we have a question from Joe. Your favourite Joe's back again. So who says, hello, Dale and Janine. What are your thoughts on Wesfarmers, please? Its share price has dropped significantly, and I'm wondering if a buying opportunity might be coming soon. I often hear you mention that you like this stock. Thanks, Joe. She always brings up really good stocks, doesn't she?
She does. And look, you know, I have to agree with you. It's a great stock. Yes, we do talk about it. And I just say keep being patient, because we are watching this. It's on our hot watch list right now. What are your thoughts on this one? Could fall a little bit further?
Well, look at this. Look, it's like sitting in the bath, watching the bath water go down. It's fun, but it's still going down. It really is. And I think Wesfarmers got a little bit more to go. I think it's way too early for Wesfarmers, but we can have a look at the chart rather than me talk about bath jokes.
Yeah, look, I think that's a great idea. I don't want to have that thought in the back of my mind while I'm leaving the show. Thanks for that.
Well, it's not a pretty sight, me in a bath anyway.
Yeah, okay. All right, so we just have a look down here. We've got a line down there. We might be able to get a trend line in there somewhere, and it's still tracking underneath that line. So until we actually get some evidence of support and it starts moving back up again, I wouldn't get too excited, but I can't, you know, I am excited about the fact that it's fallen the way that it has. Not for people who are holding it, I feel for them, but anyway, what have we got in terms of the percentage decline at the moment? It's 30-odd%, which is amazing, isn't it?
It is amazing. It really is. It's a big fall for Wesfarmers, you know, and, you know, I mean, technically, in the technical terms, that's crashed. Wesfarmers has crashed. But it's interesting how it's fallen a hell of a lot more than a lot of other stocks in our marketplace, for whatever reason it has. But right now, it's given it's down this far. Could it go further? And the answer is yes.
Yeah.
You know, that could go up to 50%. I think, you know, if we go down a little bit more, but I think it's probably had at least 80% of its fall.
Yeah, so if it is a possibility it could go to $40, do you think?
Yeah, quite possibly. It could go to $40, but right now it's. This is where you've got to be patient, Joe. It really is one of those things, and I know Joe is patient because she picks good stocks and waits and does that. And this is where jumping early to try and get a good price, you could actually sit back and wait and get a better price. And it's not about eking those last cents out like we talked about, but right now I think there's more downside.
So let's think about what's going to happen, because when it does bounce and hit a bottom, whether it goes to $40 or $44 or wherever it stops, it's going to bounce off that bottom, and people will be thinking, oh, I could have got it at 44 or 42, and now it's up at 46 or 48.
Who cares? It's $2,
Yeah.
$1, $2. And this is where that a couple of dollars doesn't make a sheep station, that sort of stuff. And people, they think, oh, I could have bought it at this and now it's at this. So never think that. It's always about, and I know you and I keep hammering this in, it's about risk. What risk are you taking at the time of buying? And that's where so many people get it so wrong. It's not about, whether you buy it $1 or $1.05 or $1.06 or $1.08 or $1.10. $1.10 is 10% more than $1, but who cares if your risk is very low and it's high at $1? Because it's the what ifs all the time. What if it turns around and falls away and goes to 90 cents? You've just lost 10%. And when you lose 10%, you've got to make 11% to break even.
Yes.
If you don't make 10%, you only just don't make 10%, so you're in front. But you've got a high probability that it will go. So that's it for Wesfarmers. And I know we've got another email. You've got one to read out, actually.
Yeah, I'm itching to read this one.
Okay, because that's the alcohol one.
All right, this one says, hi guys, I like your show and I watch every week. My question is about the ASX stock LRK, Lark Distilling. I bought first some shares mid-2021. I was taking some profits as we went to the end of 2021. Then I decided to increase my holding and move it to my high conviction portfolio. All was going sweet until the CEO's unfamous moment. Share price has never recovered after this event. Normally I allow maximum 15% loss in this portfolio, but I decided to keep it for two reasons. Strong rumour that the board was looking for a buyer of the business, and a director bought shares a week ago for almost 200k. Please tell me what you think. Regards, Derek. I think he's wanting some raw truth there. What do you think?
Well, if he had a 15% stop loss, it's down 53% from its high.
Well, that depends where he bought.
But also it depends on where he bought. So he would have had to buy somewhere down in here to still be, in profit, even up into here.
Yeah, I mean, it's really sad to see the huge sell-off that this share has had. And the question is now, has it finished its fall? And we would probably say it's done most of what it's going to do, but it could go to 240, 220. That's the problem, isn't it?
Yeah, I think right now, and the thing is what I was sort of getting at before, is when one thing we know, if we show this chart to a 2-year-old, well, maybe not a 2-year-old, maybe an 8-year-old.
Oh, come on.
But maybe a 10-year-old. Oh, okay, a 12-year-old then, okay, don't argue with me. But they'll tell you it's going down, so why don't we as adults go, well, hang on, it's going down, why do we still want to hold this stock? It's going down. So we know with 100% certainty it's in a bear market, it's falling away, and and so therefore we need to assume it will continue to fall until it doesn't anymore.
Okay.
And what signs are those going to be?
So now I'm going to ask you that loaded question. So let's say you were given these shares as a gift. So I didn't bother to give you the alcohol. I thought better not do that.
Okay.
But I'll give you the stock.
Yep.
So I give you the stock. What would you do with it right now? You would sell it right now, even if you think it's only going to fall another 10, 15% from there.
How do I know?
Why wouldn't you just say, right, I'll set a stop loss from today, and if it falls below a certain level, then I'm out?
Well, look, it's already this week. With 2 days in this week, it's already fallen below the low of last week. So why would you continue to hold it?
Okay, so you're taking the money.
I'm taking the money and running, using it to drink.
Okay.
And then I'll come back later on when it hits the bottom, wherever that is. Because if this thing falls...
So you'll go out and buy some Lark whiskey then?
This thing could fall, into that sort of $2, but it probably could fall all the way back down to this sort of $1.45 area, and I think it's a reasonable reasonable possibility that it could fall all the way back down to that. But I'd need to study the stock more before I did it, but you know what I mean? But right now, there's no reason for me would be wanting to hold this stock. And I saw it's not a good news for, is it Derek?
Yeah.
Yeah, it's not good news for Derek, so I do apologise for that. But right now, it's driving you to drink rather than making you money. But that is our thoughts on Lark, so thank you much for sending that email in. Now, Janine, I know you love hearing some great stories and nice comments from our viewers. on how they are doing, and we have put some of those down in the comments section, but I definitely know you want to hear more too. So if you're just sitting there watching the show and thinking, hey, Janine and Dale are great and I'd love the team to know how well I'm doing from watching the show and how I'm using the information, then reach out to us and share your experience. Whether you're just watching on YouTube or Facebook or whatever it is, please take the time to comment below in the comment sections. But if you are listening to us on a podcast, can you please leave a 5-star review on whichever podcasting app you may be happening to listening to us on.
You can also reach out to us through Twitter. Our Twitter handle is @WealthWithin, or you can simply hashtag the Australian Stock Market Show.
Now, if you enjoyed this night's or tonight's show, give us a big thumbs up, and that means click the like button beneath our video to let Janine and myself know that you've enjoyed the video or the show tonight.
If you called into the show and you missed out on us answering your question, then watch our show next Tuesday between 7 and 8 p.m, as we'd love to chat with you. If you're not able to watch live, you can also email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember to include Wealth Within Live in that subject line.
So many people don't do that and the emails get missing. So remember to put Wealth Within Live in your email before you send it. But we also would really appreciate your support for what we share with you each and every week. So you can show your support by subscribing to the channel. So if you've not done so already, hit that subscribe button now and click the bell on the right of it.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all of your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we hope you had a great week, or you have a great week. For now, goodbye, good luck, and good trading.
Bye for now.